computer. Okay, so I think we're recording now. Yes, we're recording. So I'm using TradingView. We're having a look at John Doherty's trades from today in UK time. So the first one we're looking at is Euro JPY. I happen to use the Harmonic Scanner, but we don't have to use this. John uses something called levels, lines of support and resistance. I've got an orange dotted line along here, which is one very strong line of support and resistance called quarter theory. It always ends in zeros and it works between 50 pip bands. And the reason why it's called an aggressive line of support and resistance is because bankers always settle up at zeros. They don't settle up on their orders, dailies, weeklies or monthlies by, 120499. They'll round it up or round it down. The market is a psychology driven by people, and they round up or down. So price will, as you can see here as an example, it's rejecting off that line of support and resistance, and it's saying I don't like it, I can't break through, and I'm going to go up. Here it's broken and retested it, saying I don't like it, I can't break above, I'm going to go down. I'm looking on the 1 hourly because John's trades tend to be for bigger pips, 20, 40, 100 pips, and you need the longer time frames in order to catch the bigger swings, as they're called, the bigger pips. So what we've done so far is early hours of this morning, John called Euro JPY. Ignore my harmonic scan. It's just the particular system that I use with these pitchforks, which are all based on Fibonacci. They show reversal points. They do work quite nicely with the BYOB system, which is the one that we use every day to catch our 5 to 10 pips. But then we also take signals from John, who has an 87% win rate. And we are looking through his 3 trades today to see how to take a trade, how it actually works, and how to set our profit and loss and stop loss, and actually put the position on. So what we do here, a long position means I would go for a buy, price is going to go up. In this case, we want to click, this is TradingView, but you can also, you don't have to do it. I don't take trades on TradingView, I take them on MT4, or there are other platforms like the web-based one called CTrader. And the advantage of using CTrader is that it is what you call web-based, so you do not have to purchase a monthly subscription to a VPN, a virtual private connection. So I'm going to put a short position on here, and it's going to be round about this entry zone John called. So I'll just set it just below there. And then you look at settings just to make sure. Now he set his profit, his entry price. We're going to put that in at 120.05, as John called it. And the profit level on this one, we'll just go for take profit 1. And he put that in at 119. Was that 65 or 85?
85. But the sell, wasn't the sell at 120.45?
No, that's the stop loss.
Oh.
Yeah, 119.85.
Oh.
Because if you're selling, your stop loss is going to be higher than your price. So if our entry price is 0.05, we've got to have a stop loss that's higher. And that will be this one, which is 120.450, which gives us, now this says ticks. You ignore that third place, that's what you call a pipette. It is the small figure that appears when you see prices, ticker tape prices, and it's to the right of the decimal point. So this is includes pipettes, but to get your pip count, you will just take the first 2, and so that's 41. It's 41 pips. The 0 represents the pipette. So We're going to save that, and that now has adjusted exactly what our situation is. I'm just going to move that along a bit. 120.05. It's just moved slightly, I think. My system's a bit slow. That's it. So now I'm on the hourly, and you can see that price at the moment is in John's entry zone here. This is where price is at the moment. Now the markets are just about to close, so this is when you get a dead zone, and the first market to open, you can see it on, this is something called PCFX. You set it to your trading sessions, you just set it to your local time zones, and it comes up with, if I show you here, it shows me the inputs. So I don't look at the Sydney session. Now this is Paris time. Paris time, UK is 1 hour behind. So I don't look at Sydney. So I don't trade ever between midnight and 2 a.m. my time. Tokyo session starts about 1 o'clock, depends on whether it's summer or winter. For Tokyo session, sometimes I trade that, and it ends as it crosses over to London, and I've got the London zone. So Tokyo is green, London is yellow, and blue is New York. And so I can see where and New York starts at 2 p.m. And London starts at 9, which is 8 a.m. UK time. Now the reason this is important, so now we can see we're entering this dead grey zone, is because pairs move at different times of day according to whether they're active in that part of the world. So Euro JPY may well start to move from 2 o'clock in the morning. And the way you would check that is you go back across where price has been, and you just look at patterns and see whether it does indeed move, or it may not move until London. But on John's trades, because they're longer trades, you just put this in here, it doesn't really matter, because his trades will take place more than over the course of a day, because they're looking for bigger pips. So 10th of December, we're going to be looking, again, I'm working off UK and there. So Tokyo opens in a couple of hours. Do not trade now. And then we can enter, we can put, you can do a pending order. So you could enter at exactly the price he has said, if price is still above it. And you literally just put his stop loss in, set your take profit, and I'll show you how you can get it to just get you out of the trade. And you can put a trailing, what they call a trailing stop in, which varies according to different pairs, really, where you want to put it, because sometimes that can stop you out, and that is a bit of a judgment call. Or John can talk to you, or another session, about how to do something called trail is 62, which is the 1 minute average of price over 62 days. So sometimes when we're actually in a trade, we will follow that line down on a trailing stop automatically, or using the exit manager, which we then put onto our MT4. So I'm going to go back to the MT4 before the markets close, so we can still do this. So we're going to do a new order. Here you can see you've got the option pending order, buy limit, buy stop, or sell stop. Or you can just do market execution. So we want one of these two, the sell limit. I never ever use pending orders. I know other people do. It's just not ever my style of trading. So I think what you want would be a sell stop. And you think of it like a bus stop. The bus has stopped, I've got on, and I'm carrying on through. So I think that's what we do. And then you press the button saying place. So I can do 2 orders as it's a demo account. I'll do number 1, market execution. So we'll put the stop loss in here where it says stop loss. at 120.450. We'll put the take profit in at his first take profit range, which is 119.85. Now, the issue here is that take the trade on your phone or do it on CTrader. You can't do it on here. You can do it with Exit Manager if you've got that included and downloaded, but you close out half your lot size and you let the rest run, or yes, that's right, to get it to run to take profit 2, but you close out half at take profit 1, so you've secured the bag, you've secured your money. So that's a little bit more involved and not something for tonight. This is very simply set my stop loss, I'm entering the trade, and here is your lot size, which varies according to your account. And what I haven't done is looked at the Forex pip calculator on the percentage. So, you know, just let's leave it at that. But, you know, it depends on account size. We've started to go into that the other night. So you need to work out how much you're going to risk, and you want to risk no more than 3% of your account, and you use the Forex, the pip lot, the lot size calculator to work out what lot size that you put in here. And then we're going to do a sell by market. That's gone. So that's now got us into the trade, and you can see it's in drawdown 0.8. That's quite high. And that's because it's just obviously reversing a bit as the market closes. I'd expect it to swing a bit because these are bigger trades. And you also will have late at night what you call the broker's spreads and commissions. So once you're in the trade, you right click here, we've put the stop loss in, we don't need to do that. We've got the price we've entered. So let's just check the price we've entered. We've entered at 120.115. So we've entered above John's price, which is probably why we're in slightly bigger drawdown than we should be, because I didn't do a pending order, but I'm going to do a new one with a pending order now. But I'll just show you how you can modify this. You can put a trailing stop on, and this means that after 10 pips, your stop loss will immediately follow you behind. It says it says 15 points. That equates to 1.5 pips. So it'll, after 10 pips profit, it will follow you behind by 1.5 or 2 or 2.5 or 3 or 3.5 pips. So that should price reverse on you, it stops you out, but without you then losing money, reversing that 10 pips profit back into loss. Now, the problem with this, if you want to call it a problem, is if you set it too tight, you then, and that's happened to all of us many times, we get stopped out of a trade. And if you've given it a bit more room to breathe, then you don't get stopped out, and price can just flow, because price flows. It doesn't move in straight lines up or down, it flows. The market flows in waves. So you can set a customized one. Trailing stop is a method to move stop loss automatically, which means you could be at work, set this and forget it. A minimal trailing stop is 1.5 pips or 15 points. So if you typed in here, now the first profit is 20 pips. So if we put in 100, that would mean that after 10 pips profit, it will then move, minimal trailing stop, it will follow you behind by 10 pips. I forget exactly. I'm going to have to look at the video again myself, because I do use this, but not very often, because I tend to be sat at the computer and I set alerts. So maybe we set, is it after 200? I can't remember, but I'm going to set it at 100, which means 10 pips. But I'll have to, there's a little short video to watch somewhere. So now that's turned yellow, and it means it's just going to do that for me automatically. After 10 pips, it's going to move the customized trailing stop to follow it behind that 10 pip profit, so that if the market reverses, I don't then lose all my money back to the market. So I'm going to do another trade now where I do it as a pending order, which is good because we're slightly above John's entry price. So we're going to do a pending order, and I think I'm getting this right. The sell stop, which means it will stop and pick us up on the bus when the price comes through that point. You type in the same stop loss, 120.455. We're going to put the same take profit in, TP1 of 119.85. Pending order, a sell stop at the price John recommended, the entry price of 120.05. Now that means if it never reaches that price, say it shot right back up to as a buy, you would never get in the trade, you'd never lose anything, and you'd never be liable. So I'm just going to place that and see. Now you'll see that nothing has appeared on the screen, and that's because price has not hit that point yet. So it's got it down here as a sell stop, Euro JPY, lot size of 0.05. That means you're risking 5 cents for every pip. And we've got a stop loss in, that's correct. I always check my figures, by the way. I always write them down and double check them, because there have been a number of times where I've looked at them and thought, oh my God, I've typed the wrong thing in. And then the take profit of 119.85. And if you do get it wrong, you see you've done something wrong, you just right click on modify, and it will let you come back and modify, or you can delete the whole thing because you're not in the trade. It won't let you delete one. Well, you can close out if you are in a trade and don't like being in it. So price now here on a sell is showing that red means it's going downwards, blue means it's buying. So it is moving down. It's at 120.12. So it's got 10. No, it's got 12. It's got about 7 pips to go to get to our price. And I think the market's going to close shortly. I think it closes at 11 my time. So soon you'll find this all just freezes and you won't be able to do anything with it till the market's open again, and the first one is Sydney. So what else do we need to look at? So what we can do is go back to that. We've got it on here. You will be able to see if you're on Vibrata with BYOB. Now, you see, John isn't necessarily doing BYOB, so I don't think there's any point in adding the BYOB indicators. He's purely working off horizontal lines of support and resistance. So he set his stop loss just below quarter theory, which is what I've told you is these strong lines of support and resistance. Personally, for me, in a sell in this situation with my style, I would set it above, but it's personal trading choice. He set the entry price zone above quarter theory here. Personally, using my strategy, I would have my entry price below it because price has to break through that strong line. But again, you can't argue with him. He's very successful, 87% success. And then take profit one is here. Now, the only thing about his trades, looking at this, and this is the first one I've analysed, to be honest, is you'll see here your risk to reward ratio is 0.5, which means you're risking double, you're risking 40 to make 20, which in percentage compound growth terms of your account is not good. But what his trades do show is that you can go on to do the 40 pips. You know, his next one is down here, so that would give you, if you did close out half your lot size is there and just took the rest down here to the 40, he's just above quarter theory, then you'll see it becomes 1-to-1, which obviously is greatly improved. And then you can go to smaller time frames to actually see more clearly what price is actually doing, but I shouldn't imagine he's necessarily doing that because they are longer term trades. What he is doing is saying once you see on TradingView now, you can get a free app called Call Alerts to set an app on your phone. I've got the paid version of TradingView, so I can create an alert on that line. Does it say add alert on horizontal line? Yeah.
Alice.
You can see this little clocks come up here, which means that when price moves and hits that blue line at John's recommended entry level, that I will hear that alert on my computer and it will come through on my phone, and there's an email. So that tells me then I could get in the trade, or, which I mean, obviously we've done that already. So you know, you'd be at work, so you would have set it as a sell stop, so you wouldn't have to do this. This is the good thing about his trades. He, like you, is working a lot, so he sets them all before he goes to work, and he checks them on his phone in his coffee break. So I would probably be checking it here at Take Profit 1, putting the alert on, or a few pips beforehand, so that I could decide if, there it is, it's come up, so that I could decide if what price was doing, had it, you know, had it come back, or was it indeed carrying on through. And then I would take half my profit on my phone. You download the MT4, you press the button that says close, and then it allows you to lower the lot size. So you halve the lot size from 0.05 to say 0.02, and then you close it again. And what it does is it just carries on with the remaining lot size, because you've closed out half of it. And that's basically how it works. So we'll look at doing another one before his. I'm just going to remove that alert. And you know, you can see he's done his analysis. I mean, I use the Harmonic Scanner. It's a downward trend. It's come through these very strong lines. You can see how it's rejected that pitchfork. It's now come below the 1 minute line, which is in a strong downward trend, you know. And as I say, he does all his analysis very, very accurately. And it's really as simple as that. So your key point for you is making sure that you can set a sell or a buy stop, so that you can get into the trade. Or if the price has gone down and it's going to reverse a bit, like it does because it flows, you then set a buy limit or a sell limit to say, this is the highest price at which I want to buy, to sell. If it goes beyond that, I don't want to buy it. I think it works like that, and then it will get you in if it re-hits that price and then takes you down. So that's Euro JPY. We'll have a look at one of the others, NZDJPY, which I don't think I've looked at today. So I'll just bring that up. Something's beeping at me in my ear.
Now with this program you have up, and I see you have a bunch of pairs open.
Yeah.
Does that make the difference between buying and free version, or?
What do you mean, these ones, or do you mean on the right here?
Up top there, where you have all you're going to look for the pairs.
Oh, these ones here, that on the drop down.
Up top, yeah.
I've created all those. If you get TradingView free version, you can create your BYOB template. You can save it as a template, then put all your pairs in here as a watch list, and then you just click on it and can overlay the template that you want. The reason I got it slightly different is, number one, I set it up incorrectly in the first place, I think, when I didn't know what I was doing. But number two, it's because I save all the scans for each pair. So because I've got all the history of those scans, if I click here, I can only load up one template. And I'm adding, it means I should have created templates for each one, I think, and I never did it like that. So mine is slightly not done quite right, if you see what I mean. But not most people, a lot of people aren't saving the historic scans like me. You know, they're just taking the trades off the current scan and leaving it at that. So you can save your watch list, add your symbols, save your watch list. So I have each of mine under which session it is, just so I can see what price is doing. And you will see when other people are trading, they click on it there. But if I now want to do that, I think I'm very worried about messing up what I've got, and I'm not quite sure how to do it. Whether I know, like on, we want to look at NZD, JPY. Let me just find it again. NZD before market closes. NZD, JPY, where are you? There. So I have thought about this because I've got, in fact, I'm not sure how often I trade this one, whether I've got anything on this, because it's not one that I usually trade. I have got some scans on it, I see. Maybe I do trade it, I can't remember. I haven't traded it for a while. NJ, yeah, I do trade it. So what I can do is add to watch list. NZ, in fact, I haven't got it on the watch list, so I'll add it there. And there it has come up on my blue list for New York, which matches my sessions up there. But what I was thinking of doing is, you know, can I actually save this as a default template and create a template for each of these that I've got, which shows all the history. But I'm not quite sure how to do it, and I'm very scared of messing it up because it's got all my history on each one. Because the point about pitchforks off Harmonic Scanner is that it means that if you haven't got a new scan, you can still trade off pitchforks from old scans. That's the whole point. So you'll get like 13 trades. I don't have to look at Vibrata or anything else to take a trade. I just take my own trades using my scans that I've saved. So 1 hourly, well, we know it's a sell, which means a short position. He has said sell at 71.22. 71.22 flat is round about there. He said stop loss at 71.62, round about there. Then I'll just go to the settings and adjust it and take profit 1 of 71.02. So he's coming down right to that strong line of support and resistance, what you call levels. So on the settings, entry price 71.22, profit level TP1 71.02, and stop loss. And I never, ever, ever personally trade without a stop loss. I think I'd have a heart attack. I don't understand how people trade without stop losses, even if they're sat at their computers. So again, you can see we've only got a risk reward of 0.5, which is very low, but John's trades usually do go for the bigger pips than the TP1. He set it obviously to hit where this strong line of support and resistance is. You can see here, price rejected off it. That's what we mean by a strong line of support and resistance. And it is also, for me, an upward scan, although John doesn't use pitchforks. So although here it dipped down, you can see the 62 is kind of leveling off. But is it really going to go below here to TP2? Is it really going to do that when the scan says upwards? Because the scans are based off Fibonacci's, which are very strong reversal points in the market. So the reason I work off pitchforks is because that's where the start of something called the Elliott wave starts. So it goes 1, 2, 3, 4, 5, and then it starts again. And that's where you're catching the swings in the market. So personally, for me, I'd be looking for this to bounce off that and come back in this pitchfork. But I can't argue with John's success, and I wouldn't wish to, because hell knows I don't think I get as many right as he does. Not trading like this. I just like scalping. You know, that's just what suits me. So now we're going to go to our MT4. Let's hope it's still open. We're down, that's good. We've only -2 drawdown on the Euro JPY. So we go to NZD JPY, we click on it, we right click, new order. Here it is. We'll keep the same lot size. We'll put the stop loss in of 71.62, and we'll put the take profit in at TP1 of 71.02, 71.02, and it's and we're going to do market execution. We're going to, it's very important to always do that long or short position, because it really does help you remember where price is compared to what you've done on your trade. So we're going to modify this. No, we're not. We're going to put a trailing stop on, because this is our, and as I say, I can't remember exactly how to do it. But I've put that one on at 100 points, say 10 pips. So we've got an NZD JPY done like that. We're now going to do it again as a pending order. So I think, I didn't double check, I think price is above. I'll have a look in a minute. Stop loss the same, 71.22. Take profit at 71.02, 71.02. We're going to have it as a pending order, and we're going to have it as a sell stop at the price of 71.22, 71.22. I think that's right. Yeah, let's see, and then place. No, that's telling me it's invalid. So where is price at the moment? 71.046. What have I done wrong? Sell at 71.22. Oh, stop loss should be 71.62. Sorry, that's why you should always double check. And let's place that. Oh, done it wrong again. Stop loss 71.62. Take profit 71.02. And at the price 71.22. And we've got price. So it's saying that my stop loss isn't open price you set must differ from market price. Open price must differ at market price. You set, the open price you set must differ from market price. So market price is at 71 on a bid or an ask. Oh gosh, what's the difference between a bid and an ask? One's the sell price and one's the buy price. I always forget which way around it is. I haven't looked at it for so long. So it's not varying. So what can I put that as then? At the price there, open price you set 71. So if I do that at 71.200, will that do it? You just have to adjust it, see if you can. No, didn't like that either. Right, hang on a minute. Let me just minimize that. Remember which way the difference between bid and ask. Forgotten. The bid price is what the dealer will pay for a currency, and the ask price is the rate at which they sell the currency. So we're looking at the ask price. Right, and the ask price is 71.069. 71.069. Oh, it's 070 now. And then our price that we wanted is 71.22. 71.068, 71.068. 6 from 12 is 6. one from 71.220, 71.068, 2. I can't really see what I've done wrong there. 226. Because I don't usually do it like this, you see. It worked on the other one. Stop loss 71,620, definitely right. And then what's wrong with my price? If my price is, okay, then let's try it like that, 71,068. Oh, that must be why, because, no, because price, stop loss, 71,068. Well, if I put it in at 0.050, 71.22. 0.22. I'm not really understanding why it doesn't like what I'm doing.
Is this the stop loss we're trying to
No,
set?
this is the price at which we want. John has said enter the price at 71.22. So that's the price at which I want the bus to stop and pick us up at. So whenever I try and place it, it's telling me that the price I've set must differ from the market price, which is 71.068. Call it 0.70, it's 69 at the moment, by at least 0 points.
So the bus passed us and can't pick us up?
That's a very good point. The bus has passed us. Do you see you can do it. You know you can do it. It's because it's late and I'm tired. That's what I'm going to say. So very well done. Seriously, you've worked it out. See, you do know how to do it.
That was just one thing.
No, hang on a minute. It's still at 71. It still told me, okay, 71. It is dropping now. 0.051, 0.69 rather. Okay, I'm going to leave that for the moment. And you need to drag it onto your screen so that you can see your pairs are on the screen. I'm going to go back to our chart. Oh my God, you see how it's just dropped? That's why. Because I said the bus should, you are right. My brain wasn't computing. 220. We were talking about getting in here and it's already hitting TP1. Look at that, it's just dropped. See?
Mm-hmm.
That's amazing. So that's that, the cell stops being and gone. So what we could do on this then is move it to TP2, NZDJPY.
70.820.
70.82, okay. 70.820, which is 820. Okay, so we'll do this as a market execution because it's past John's general entry zone. And I would suggest we'll move, I'll leave the settings as he had them because then we're kind of not adding complications, but because it's moved so much further down, you could move your stop loss down so it's just above that strong line of support and resistance because, you're still covering your previous high here. So we'll come back to our NZD JPY. Now the reason it's still saying minus is we got in very late, and also as this, the spreads and commissions thing. So I'll just go on the hourly. You click on the box, and then up here you can look at different time frames. So I'll just put it on the hourly, so you can see the SAR is coming down. I haven't set it up with the stochastic on this demo, but I can do. Then we could actually see the BYOB, and here on Euro JPY. So I'm going to do a new order very quickly, we're going to put in that stop loss of 71.620. We're going to have our TP2 now, which was 70.820, and where stop loss and take profit, we just press the sell, the red one, and we're in at the same lot size. So we've got another order running. So sometimes what happens is that some brokers combine the pips on one screen and some leave them separate. So we've got 2 orders. So it looks like it's separate at the moment. So we've now got 4 trades running. Interestingly, we must have been in, it dropped quite quickly on the NZD. Gives you the time here. But I think my timestamp, I always find it a bit different from the times that I'm actually in. But anyway, that's the principle of it. And then you download something called the Pipsometer. I do like to see the little pip counter. I find that helpful. But CTrader, it shows you all this stuff very easily. And then the third trade is NZD USD. NZD, I haven't got that one up, so I'll take one of these. Loads chart. I know, you know, you could just do all this on your Vibrata if you've got that pack, or a free version of Harmonic Scanner, because Harmonic Scanner is included in for free in IML, and then you can just have a free version of TradingView. So it just depends how, and then you can just take John's trade signals. Just depends how you want to do it, I think. NZD USD. There we are, NZD USD. I always kind of double check because, you know, sometimes I took a trade recently on completely the wrong pair. I just pressed the wrong button. You know, your mind wanders, you know. I just thought, hell, how the hell did I do that? So I do physically write down what I'm doing and double check the figures. Again, I've typed in wrong digits before. So we know we've got go to the icons on the left. We know we've got a short position. We want to sell it at around 0.6555. Price has already moved down, so I'm going to have to move price down. Our stop loss is 6595. All right, right up here at the quarter theory. Again, he's hitting that strong line of support and resistance. And take profit 1.6535, 0.6535. So again, you've got a low, not very good. Gosh, because price has moved, hasn't it? 6535. I don't think we'll bother with that. I think we'll go for TP2, 6515.
So I guess, you know, when he calls his trades, you really should be trying to take those trades close to when he calls them.
Well, ideally, yes, marking it up and putting an alert on, because you can't tell always when price is going to make its move, can you?
Yeah.
That's the point.
Yeah.
6555 and take profit to stop losses 6595. Take profit to 6515. So now that's a nice little trade moving very nicely. That's on the hourly, and it's come below quarter theory and the 62 and that pitchfork. I might take this one myself in a minute. Let me just go back to my demo. NZD USD, and this is because we're moving into the end of New York and opening of Sydney session and Sydney trades, NZD and AUD. And I'm looking, I don't know, where have I got that? NZD, there it is, NZD, USD, let's pop that there. So we're gonna right click, new order, we'll leave it on the same lot size, stop loss 0.6555, take profit, we're going for TP2 because price has already started to move, 0.6515. And we're going to do immediate market execution there. So what we'll do on that one is we'll do that trailing stop, customized. Oh, that's already in profit. So some of this might take us out because I've got to, look, we've got 3 of them, 2 of them, they're just all swinging to profit, those 3. The Euro one is moving slow, and that's probably because it'll move in Asian session, which will be 2 hours time from now. That's probably why. But these 2 are moving now because it's coming up to Sydney Open at midnight my time. So one thing I could show you from here, which might be useful because we discussed it and I stumbled over it a bit, is the position size calculator. So if we look at the fact, I can't remember what, right, we're in, this demo is in dollars. So we change our account currency to dollars, and I'll just show you how it can affect you leaving on the money on the table. You know, if you're not weighting it properly, not making as much as you could. So if we had an account size of, I'll put in, oh, connection slow. Very slow. It's frozen for a minute. Page on. Oh. I've had a problem with it before. Come on. I suppose I ought to close some of these things. So I've got so many windows open. Close them for the moment. Right, try again. Okay, USD, 500 in there, risk to reward ratio of 3%, stop loss of 40, currency pair, Euro JPY. Now that tells us that we're going to be risking $15. We should have a lot size of 0.04. But you remember I put everything on at 0.05. So let's see if we do the same risk to reward ratio, but account size say of 500, risk to reward ratio of 3%, sorry, risk of only 3% of my account with a stop loss of 40. So that's, it says I need a lot size of 0.04 for Euro JPY. Let's see what it says for NZD JPY. So on NZD JPY, calculate. Okay, so sod's law, it's telling me the same lot size. Sure, there'll be one where it doesn't. And then the third one is NZD USD. What lot size is it telling us? NZD USD 0.037. Well, okay, you would round that up to 0.04. So they do happen to be all the same lot size. So if we did an account size of 200, unless you had a leverage of 1 to 500, which I don't think many brokers now in the US allow you, you would only be able to place 1 trade at a time. So your leverage, it's a bit like getting a mortgage, and how much the mortgage broker will, if you've got a deposit, will lend you 4 times that to buy your house. So leverage enables you to leverage more of the broker in order to place more trades, or but at lower account sizes you can't run, and a lower leverage like 1 to 100 or 1 to 30 some brokers are now doing, you are very hampered in how you can grow your account on the compound effect and flip it. Excuse me. So NZD USD at 3% on an account size of 200 with 40 pip stop loss, calculate. That's telling me I'm risking $6 and I only need to place a lot of 0.01. And you can see how on the other ones at 0.04 at 500 account size, your results would be about $15, but here it's only 6 because your lot size 0.01 is only worth 1 cent a pip. So if we go back here at 1 cent a pip, we're only a cent in, let's say that was a plus figure, we haven't got any pluses at the moment, plus 5 cents. But if you had that 500 account size and it told us to do 0.04 and it told us we were risking $15, then you've got a bigger, you've got a bigger amount, because you've got a bigger lot size, where each one, so 0.04 is worth 4 cents per pip. Do you see what I mean? So if it's 4 cents per pip, you'd be making 20 cents. If that was, you're losing 20 cents. Whereas if you had 0.01 of a lot size, you'd only be losing 5 cents. But it works the other way around as well. You can only make tiny amounts to grow your account, because you'll be limited if you've got a very small account size to start with. You see what I mean?
Yeah, I guess I'm just
I
blah.
know, I know it's you just have to, as you see, I've been in nearly 2 years and I still stumble over it. I'm not like Paul and the other people who've got the calculator, and Brian, and they just whiz through the maths. I'm the same as you. I struggle with math, but the more you look at it and repeat it, it does sink in. So if you want to get to that figure that you told me, you're going to need to grow an account so that you're not risking more than 3%, and that it's coming out that your lot size is accurate, and that it's going to be worth so many pips. You see what I mean?
Mm-hmm.
Because 0.02 is worth 2 cents, 0.03, 3 cents per pip, 0.04, 4 cents. So if we put this up at 1,000 and said we want to risk 3%, which would be the equivalent of £3, $3, sorry, on 1,000, 3% would be 10.30. So 10% is 100, 1% is 10, times 3 is $30, okay? If we want to risk 3% with a stop loss of 40 on NZD USD, calculate, we're going to risk 30, but we want to make that one, we've gone for TP2, which was 40 pips, wasn't it? On the NZD, yeah, 40 pips. So TP2, so what we're saying is we're going to risk $30, which is 3% of our account. Yeah, got that?
Mm-hmm.
Yeah, we're going to risk
Yes.
3%, which is $30, and we want to make, and that's going to be equivalent to 0.07. So that's 70 cents per pip times 40 pips. So
$2.80.
that would be 20. Yeah, I've got that as 20, coming out at $28.
No, it'd be $2.80. It'd be
No,
$2.80. 3%?
no, no,
No?
no. The 3% is the $30 being risked, right? 3% of 1,000 is $30. Yeah. $1,000, 3% of $1,000 is $30, yeah? Yeah. But you remember we said lot size values differ. 0.01 is worth 1 cent. So 0.07 is worth how many cents? Ignore the 5.
7 cents.
Correct. So each pip is worth 7 cents, okay? And we want to make 40 pips. So 7 cents times 40 pips gives us 280 cents. So that's $2.80, doesn't it? Is that, no, that can't be right. Must be 28. Yeah, no, it'll be $28. Won't it?
0.07 times 40 pips.
No, do 70 cents. Do 70 cents times 40 pips, times 40.
That's 28.
Yeah. So that to me is $28. And if you look back at our NZD USD, we had a risk to reward ratio of nearly 1. So that's about right. We're risking $30 to make 28. Yeah, it's definitely $28 because it's nearly a 1-to-1 risk to reward.
Right.
So we know we're risking 3%. So on $1,000 account, I'm sure that's right. On $1,000 account, yeah.
Sounds like it would be.
It would be, because you wouldn't know. It can't just be cents that you would make. It's 70 cents. Well, okay, let's do an easier calculation then. Anyway, the point is, that's why this risk to reward is so important, because why do you really want to risk more, than you would gain? So I always do a minimum of 1-to-1. So I think you're right. You've got to make sure you've got alerts, so you get in the trade where you can set this so that you're going to get a good ratio on the entry point. You know what I mean? Where price hasn't moved that far down. So yes, time of day. When was the trade called? As we saw on NZD JPY, it shot down as we were talking about it. So we lost pips there. Look at that. Well, it's wicked out now, but a ratio of 1-to-1, that'd be quite a good one to do. NZD JPY. NZD JPY there. Do the same calculation. 6242, that's exactly 40 pips, so we're correct there on a 3%. Calculate. Now that's telling us we need to have a lot size of 0.08, and that's because of the reduced value of the NZD, the New Zealand dollar, against the US dollar. You need more of them to make up the equivalent. You know what I mean? That's why it's varying your lot size is important, because if you did that at 0.07, you'd be leaving money on the table, because you need a larger lot size to make sure that your NZD is comparable to your USD, like changing money at the airport. It's how many New Zealand dollars do you get for your American dollar. So on a 1-to-1 basis, at 3%, we're risking 30, and 8 times 80 cents, because you round it down or up, at 80 cents times the 40 pips, yeah, the 40 pips, that, because it's 1-to-1, we know it's 40 pips, comes out at 32. So you're risking 30 to make 32. Now, this is where having faith in your traders who are calling the signals is important, because clearly, that's not a very good risk to reward ratio, is it? So it'd be better if it was here, there, because you'd be risking, that's a ratio of 2. You're only risking 20, you know, half of it to make 40. And that's why looking at setups or a signal, a trade signal, a signal trader's calls, track record. If you're just going to blindly take their signals, that's why it's so important that you know their win rate, say 87%, and that you get in round about the zone of their entry price. Because otherwise, you know, how can you move forward on a compound basis if you're risking more than you're going to make on a live account, you know? You see what I mean?
Mm-hmm.
So let's go back to our MT4. It's still all in minuses. It doesn't really surprise me because of the time of, you know, it's the close of market, opening of Sydney. That's always a bit of a dead zone now till 2 a.m. But I'll keep an eye on these and see what happens. So I don't know whether you want to do it on a free version of TradingView. It's very easy to get you set up on a free account, and you'll just click on your pairs. You add your symbol to make your list, click on a pair, and it will bring up price coming across the screen. And then you'll have the same symbols I've got here, and you can put on your, if I pick one of the pairs where I've got, not that one, one of them I've got stuff already on it.
Well, to be quite honest, you know, I'm picking up little bits and pieces here and there, but there's no way after just watching this the first time that I could go to MT4 and just place a trade. It just,
Okay, well,
yeah,
this is the template, Laurie, for BYOB, where you can see the Heikinashi candles, the
I
SARs
know,
with the settings, and there's your stochastic.
but
So
where you clicked on, like the nitty gritty of where you clicked on to
this,
place your
this,
sell, your
here,
stop loss.
here, yeah, on the MT4 down here, clicking on here, new order. Can you see that?
Yeah.
Yeah. So I just right click that and it pops up this window.
Let me just make a few notes. Click on pair. Okay.
And
Okay.
there is a video in IM Academy on how to set up MT4.
Or to place a trade, you mean? I mean, MT4, just downloading it isn't an issue. You
Yeah, I'm
mean
sure.
placing a
I mean,
trade?
it's months since I've looked at them, and they've changed the website since. But I'm pretty sure there must be a video on how to place a trade. And anyway, this is being recorded, and you can always
Yes.
come back and ask me again. I know what it's like when you do it for yourself for the first time. You're thinking, oh, you know, I've had to ask Brian sometimes 4 times on something, you know.
And then, so getting back to the pairs on the left side of your screen,
Yeah.
are they automatically there, or did you need to place those there?
No, they weren't automatically there. It's file. Uh, it's view symbols. It's there under view. It's under view, and you add them in. What happens if I click on it? Here they are. And up here, what you want is what they call FX majors. There's your FX majors. And you click on it like that, and it adds it into your list. You can see
Okay.
it says show and hide here.
Yes. So it's
Um,
showing it already. That's why that's not an option for you, because it's already showing it,
yeah, so
that pair.
you just want to start by adding in your FX majors, really. And then,
Okay.
you know, we don't use exotics or indices or futures or stocks. FX crosses we use.
Mm-hmm.
Here you'll have here the crosses. Okay.
Mm-hmm.
And again, I go to the first one, I click on it and say I want to hide it, or I click on it, left clicking my mouse, and I want to show it, and that means it'll appear in the list. It'll appear in this list at the back, I hope.
Okay.
Where's
Okay.
Ord? Where's OrdCAD gone? I've probably clicked it off. Sometimes they drop to the bottom. You see all this stuff. It's all that
Mm.
exotics. Oh, there it is. So what you do, you see it's dropped to the bottom. You
Mm-hmm.
just, I've got my left mouse pressed down and I'm just moving it up
Mm.
because obviously I don't want it right down there.
Mm-hmm.
um, can't even, oh, there it is. It's gone into the yellows. So you just have to kind of make sure you've grabbed it.
Now there's times when John is placing trades at the beginning of the week, and then there's times when he's placing trades at the beginning of the week for the week, but then he's also placing trades throughout the week. What's the difference there?
Well, at the beginning of the week, when the market's open, he's looking at what he thinks the markets are going to do for the week.
Mm-hmm.
What's the general market analysis from looking at Forex Factory, or we've got an election in the UK happening at the end of the week, stuff like that.
Mm-hmm.
So particularly on longer term trades, swing trades, i.e. ones at the beginning of the week till the end of the week, for example, or ones that last 2 or 3 days, you'll do your chart setups and have a look at the beginning of the week to see where price is, what the opening and close was, and what happened the previous week. You know, is it generally in a downward movement or an upward movement, just to get your head around what's happening. And then because his trades are longer, he'll be looking at the levels, the lines of support and resistance that he thinks where price is going to kind of operate within for the week, barring red news. Trades taken in the middle of the week, well, he's just looking at trades all the time. So if he spots another opportunity across all these pairs, I mean, just because, for example, on,
And then are those trades placed the same? The ones that he calls in the beginning of the week and the ones midweek?
well, they've got their own, they will have, every trade is looked at on an individual basis and will have its own stop loss and take profit. They're nothing to do with previous trades.
Right,
So,
right.
so just because he's called this one here doesn't, which is obviously we're only on Monday, so that's a bit, you know, let's say it wasn't the weekend, but it doesn't mean to say a few days ago he might not have called you a buy opportunity here, and that
Mm-hmm.
could have been on Monday,
Mm-hmm.
and this one might be Wednesday,
Mm-hmm.
because price is moving all the time 24/7.
Mm-hmm.
So there's no difference between them, except some traders at the beginning of the week talk about generally that they think NZD might be moving down this week, or US dollar might be affected by non-farm payroll at the end of this week, blah, blah, blah. You know, they're setting it in context. But each trade
Mm-hmm.
it stands in its own right from when the market's open on Sunday evening.
Mm-hmm. Okay.
Um, so you've got to download MT4, make sure you've got it on your phone so you can check the trades. Open the demo account, because your MT4 is linked to your broker, and you can have a free demo account. Put your toy money in it. That's how we all learn. Make sure you've got the lot size calculator. Just, you don't have to bother with that at the moment, but to make the money you want and need for out of the market, you need to get your head around it at some point. And believe you me, it took me a while to understand it, because I'm the world's worst person at maths. I truthfully am. So I always say,
So
if I can do Forex, anybody can.
so you're saying download MT4, not C Trader, just stick with
I'm
MT.
For me, because we're coming up to Christmas, I
Yes,
just want you to get in as many demo trades. It
right,
doesn't matter. I can't stress enough to you. It doesn't matter if you mess this up. It has no
right.
bearing on your life
Okay.
apart from learning in a safe environment. And
Okay.
because we've got this week and next week, you can prat around, as we say in Brits language, with C Trader and getting everything perfect over Christmas till the markets go with a bang. January, you know, when we start off in January. So
Mm-hmm.
for me, I'd like to see you with your MT4 with a
Mm-hmm.
demo account,
Mm-hmm.
and you just place some trades and see what happens. And I still do this to the day. I've used so many books I can't tell you. I write down what the trade is, what I've taken, and I check it as I'm doing it, and I make little notes. Oh, it stopped me out. What did I do wrong? Let me go and have a look at price on
Can
TradingView.
you take a picture of that page, please, and send it to me? I can't.
Well, I mean, there's all I've literally done is written down John's trades. I haven't done anything fancy. Look.
Okay, probably what I did too. Okay,
Yeah, I did
what
what
I
you did.
just
In
did.
fact, you corrected me quite rightly
Okay,
on one of the prices.
but
That's
then you
literally
said
all it
you.
is. Well,
But
I
then you
just
said you mark it. You mark it. So
yes. Well, I've just marked it like with the. I put it in a square box. The lot size I should have there.
that's what I mean. Would you mind taking a picture of that for me with your?
Yes, I think I can. I'm not very good at doing pictures on my phone like this, but I should be able to because I just find it in the gallery.
You
Yes, okay.
okay? If you don't
Well,
mind,
no, I
please.
don't mind. Of course, it doesn't mean anything.
And
I mean, I'm just saying this is what I'd like you to do this week and next week. You're busy working. I
okay.
just think you would go into Christmas with your learning on some videos and things, feeling so much better about
Mhm.
it if you because it doesn't matter if you mess it up. It just doesn't
Right.
matter.
Yeah, I
And
understand that. What's the
yeah,
website for the calculator?
yeah, that is the myfxbook.com Forex hyphen calculators position size. And I'm just trying to see if I can. Where are you on Messenger? Just make sure I've sent that to you here. There,
Okay, great.
there.
Okay.
But if you get muddled up about it, ignore it. Just put 0.05 on everything. Doesn't matter. You're just on demo. You just want to see what are John's trades. Did you get in on market execution? Can you look at putting the sell stop or the buy stop? Message us in the group or phone me or put it in ninjas just to say, can someone explain? I've forgotten what a buy stop is or something. Or message John in his group. He's so helpful. I'd probably message John, come to think of it, because say, John, I'm taking your trades. I'm really keen to learn. I want to go live after Christmas. I just can't quite remember what is a sell limit. You know what I mean? And he'll tell you the answer.
Yeah. Yeah. I guess I've just been intimidated is the issue from MT4. I just got to open it up and do it. And I realize, like you said, it's just a demo account.
Well, I remember the same issue. I truthfully do, because I'm okay on computers, but I'm not a technical whiz kid, and I'm certainly not good at maths. And
That's
I
me,
did,
yeah.
yeah, I know. Well, I did struggle as well. But as you can see, once you've got your head around it, you just click it and it does it for you. And in fact,
Right.
I've enjoyed helping you because it's given me the confidence that I do kind of remember what lot sizes are. That's so you learn as a teacher, you learn as a student yourself, don't you? Because that's
Mhm.
helped me because I still get that underconfidence. Oh my God, lot sizes and percentages. What do I want out of the market? How much money do I want to make per month? And it does get overwhelming when you sit and do it on your own, doesn't it?
Yeah. Yeah.
Um, but
Yes.
I think if you want to be in a good position in spring, you've only got a short period of time before the Christmas break to just bang a few buttons and take a few trades. And it doesn't matter if it says minus 150. Who gives a shit? Sorry to swear, but it doesn't
No, right.
matter. And
Right.
that's your practice ground. So,
Yes.
I've enjoyed putting these trades on to see how they do because I learn from what we've learned from about taking a trade at this time of day. I've never taken John's trades, so I'm quite keen. I've just seen how he set his levels and understood a bit more about that. So it's been a very good tutorial for me as well. You learn by doing, don't you? All of us.
Yes, absolutely.
Mm.
Absolutely.
So at the moment on that
Okay.
little lot, we're minus $4.92.
Where do you, oh, I see. Okay.
Yeah, that tells you how you're doing.
So then when you place your orders, your trades, they show up down there.
Yes, and then you have your account history, which tells you tells you in red whether you lost, because I use this as a practice account, or whether
Uh-huh.
you've won.
Okay. Okay. All right. Well, I will give it a go. Like you said, just do it.
Yes, because how else are you going to get over this hump? You know,
Right.
it's about pushing yourself through these fear barriers, pain barriers, and you're in a very safe place to do it on a demo account.
Right.
And I just think it would just make you feel so good at Christmas to think, oh my God, I actually did a trade on demo. And
Yeah.
to be able to say to your
Yeah.
sisters, I had some fun. I took some trades on demo. Oh my God, it's great. I mean, just to be able to say that, isn't that a nice feeling? It's just
Yeah.
another great big milestone, isn't it?
Yeah.
Yeah.
Yeah. Absolutely.
Mm. I remember how
Yeah.
I felt starting to do that, and
Yeah.
yeah, it's very good. And then to be able to move over to a live account on small lot sizes is another big milestone, you know. So if you could set yourself a target that you will take, I'm not saying you can do that over this 2 weeks, but 100 demo trades, that you'd really feel just like, oh my God, what was I worried about? You just go click, 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 click. It's
Well,
just
do you
like,
think it's possible to do 100 demo trades? I mean,
well,
if I'm,
Chance, who taught me, he did 100 demo trades in a day.
but I mean, I'm taking my own trades. I'm not taking somebody else's signals if I'm doing that. There's no way that I can do, there's not another 100 single or signals being given that I could take by other people. It's ones that I have to take myself then, right?
Well, I think there's quite a lot of signals being called out. There's that going on in our trade hub, isn't there?
Okay. So you're saying take,
And
okay.
haven't you got Vibrata? Haven't you got one of the packages where it calls out trades?
Yeah, on the left side where it scans and calls trades. Yes.
Yeah. Well, there must be
Okay.
quite a lot on there. It gives you a stop loss and entry price, and it says look for this trade.
So even if I don't analyze them, you're saying just take them,
Well,
the ones that are called into
the
product.
problem with them is they call them to say this is about to happen in the market, but the move doesn't exactly happen at that time, does it? So that is the problem with them. That you'd have to make notes of, say to yourself, I saw the trade. It was called half an hour ago. You do have to go and look to see what's happening. I do
But I,
agree.
but I guess I could apply the BYOB strategy then and take my trades. I
Yes,
gotta.
yes. On demo, you could do what we're doing live every morning on your own when you've got a break, couldn't you?
Okay.
I
Yeah.
don't know how far away from the day's live trading each day your break is, because the other thing is you could watch that recording and then get in on some of them. But I'd use Vibrata and look at the trades that are called out if you're paying for that package. That's what I would
Yeah.
do. And you look at them like they were called 30 minutes ago, put the BYOB template on and take the trades and write them down in your book.
Yeah. Yeah, I might be able to. It slows down at work. I can do some at work. And I can at night too when I get home. It's just that it's slowed down and there may not be as many trades called, I
Exactly. I
guess.
appreciate it's more difficult, like we can see here.
Yeah.
But if
Yeah.
you take the NZD, AUD, and the JPY, then you're doing Sydney to Tokyo. If it's this time of night, your afternoon where you are, and then that's probably the best thing to do, to stick to the pairs that are relevant in your time zone at that time of day.
So they would be NZD, JPY. What else did you say?
AUD,
AUD. Okay.
yeah.
Well, I'll see that. They'll be calling them out on
But
Vibrata then.
if you do the vibrator ones, that's why
Hmm.
you've got to write it in your book. Because let's say you thought you'd done it properly, but correctly, not properly, correctly. and then it stops you out. Unless you've made some kind of note and had a look at it again, you're not going to have a clue what went wrong or right, are you? You're
Uh-huh.
just going to think, oh, I'm still in a muddle. So you have to make some kind of note to say, I got in, during New York session, 1 hour after this trade was called and the price varied by 10 pips. I was 10 pips short, something like that. And then call it up on your trading view so you can see that pair, or on Vibrata, you can look back at it and see, why did price stop you out? Oh, it moved the other way. Oh, I didn't wait for the flat bottom candle. Oh, the SAR didn't flip at that point. It didn't line up. Oh, it wasn't above 80 or below 20 on the stochastic. I see that now. So it reversed on me the wrong way. That's why it stopped me out. Again, confidence, because you think, that's okay then. I understand that now. Not just, oh, I lost. Oh no, what am I going to do? I've lost, I've lost my confidence, sort of thing. Do you see what I mean?
Yeah. And then when you were placing the trades, when you were going to the left there and placing the trades, didn't matter what time frame you're placing the trade on that pair. You're just, or you're,
Well, I
because
think if
I
it's
hear people,
vibrata, it would call them out and say it's a 15-minute time frame. So you are looking at it on the time frame vibrata is calling it.
okay.
It will say on the 1 hourly or the 15-minute, I think, doesn't it? It does say it's called on the 15-minute because the time frame affects the number of pips that you can get. So on the 5-minute or 15-minute, you can only get 5, 10 to 20 pips. But on the hourly, 4-hourly, and daily, you can do the bigger swings of 50 to 100 pips because they're bigger time frames.
So when you placed the trade, when you went to the left and you clicked on the pairs and you placed a trade, I don't quite remember if you had to enter a time frame then.
No, you
Okay.
do not enter a time frame on entering the
Okay.
trade.
Okay.
Where
Okay.
where it matters, let's just go back to one of the ones we looked at. Where it matters is in your analysis, because I've gone on to the hourly. John said it doesn't matter what time frame you're on because the trades are, quite big trades. But if I looked at this on the 15-minute, it's just showing me, it's like zooming in on my hand. It's just showing me more candles and in more detail where price is. So on his trades, you don't really need it because he's got big stop losses. So here's the hourly. I can still see how the hourly's doing. What I do pay attention to is obviously having it in your local time zone. I'm UTC +1. So click here to make sure trading views on your local time scale, and also the time of day, because I will look at when a 15-minute candle has closed. So that's now midnight 21. So I'll say, okay, where did that last 15-minute candle closed? And here I've got 7 minutes of the latest candle. Oh, the last one, I say to myself, very little trading, didn't fill the order, and it isn't a flat bottom. So I will look at the 15-minute. I will also look at where, say it was coming up to midnight, 30, half past midnight, then I would look at where the 30-minute candle closes, because that tells me if it's a solid big move, very little movement in price because these are small candles, but they're a nice flat bottom on the sell for that one there.
And how do I know how to set my time zone on there?
You just click on time zone at the bottom of trading view where it says time zone, left
Okay.
click on it and click on the one that's relevant to you.
Oh,
So
okay.
your UTC -6. So you'll be one of
I
the,
am, or I think I'm New York.
oh, you're New York, sorry.
I think I'm New York.
Okay.
-5. I think it was
-5.
-5.
There.
Okay.
So you'd click on
And
that one.
And in im.center, the thing is with the training and whatnot and finding the training on the MT4 and how to work it and place trades, it's almost as if it's hard to find. It's almost as if you have to go through each training module one at a time before you can
Well,
advance to the next
I
in
can't, I
this new
know,
one.
I can't really comment to you in detail because I
Yeah.
haven't been through all the website myself.
Yeah, it's
So
crazy. It's almost like you have to go through the entire training. It's not as though I can surf it and find what that particular training. I could be wrong, but I've been in there and that's what it seems what happens.
yeah, I'm afraid I'm saving more going through those videos and getting to level 400 for Christmas. I'm not that totally familiar with it.
Yeah.
So I've put the SARs on. We've got a SAR flip, NZD, USD. We've had the SAR flip. It's coming back up. So you go to the hourly, it's still down there. And then on the 4 hourly, it's coming down. So that's telling you it's a longer term time frame situation. So John's got us in about here. It's still got room to move down to below 20. So you should be all right for that bit there. Well, let's just have a quick look then in IM dot center. Or is it IM Academy? Which one is the training one?
It's im.center, I
Yeah.
believe.
Um, academies. Uh, academies. So resources, learn Forex trading in English. That one. Is that the one you've been going in?
I believe so, yeah. I'm pulling it up on my iPad too to do the same.
Okay, so learn Forex trading in English, 68 items. So yeah, it is this one. General education, required education, product education, advanced education. So if I click on advanced education, I can play any of these. It's not limiting me. I've got market geometry, balance, Elliott waves, Y harmonics, back patterns, Gartley's, but da-di-da, trending, risk management planning. You see, that would be a good one because
Hmm.
that'll be lot sizes and stuff.
Hmm.
I haven't a clue what auction market theory is. I'll get that used. And then let's look at the 300 price reversal, pair crosses, pivots, power of twin trading, Bollinger's, Elliott waves, and 200 chart.
See,
Here you
when I
are. Chart set up for MetaTrader 4. Got a little
okay,
video.
when I log in, this is what I see. So I don't know how to get to where you were at.
Uh, okay, well, look, all I did was type in IM Center. Did you go
That's
to
what I
IM?
did.
Okay, then I went to Academies in the left-hand column. Academies.
I don't see that. I don't see that on here.
Have you got home completions, academies, pip talk products, go live and back office?
No, it doesn't look like that. And it's probably because it's on my iPad, not the laptop. So maybe if I do that on my laptop, it'll be different.
Well, I'm sorry, I've never had an iPad, so I don't know how they work.
Yeah, my
I've always had just a plain old computer. Um,
home completions. Oh, wait a second. Academies. Okay, it's the book. So I don't have the words written. It's just the those icons. Okay, so it's the book, Academies.
yeah,
Okay, okay.
and then
And you went.
I'm in 200 series required education, and
Hmm.
the one that's caught my eye for you is
See,
the
I don't
one.
see that. When I go to the academics, this is what I see.
Yeah, that's
You
right.
were there. Okay, and then where did
So
you go? Oh,
I went
FRC.
to FX Academy, learning Forex trading in English, 68 items, and I clicked on that.
Okay, okay, gotcha.
Okay,
Okay,
and then I'm just having a look at 100 series. What is Forex history? Blah, blah, blah. Market, there's Trading View Basics under the
okay,
100 series general education.
okay.
Um, uh, and it's got lot sizes, what are pending orders. You've got short, all these videos are short, they're not hours long, they're four
Right,
and five
right,
minutes. I've been
right.
through, I've got to level 2, bid versus ask and what the spread is. Um, So I would definitely go through, and there's what a stop loss is. So the ones for you that I would tell you that I think you should go through is FRX 108 Trading View.
Okay.
FRX 109 When to Trade Forex.
Okay.
FRX 10 Buy versus Sell.
Okay.
FRX 111 111 What is a pip?
Mm-hmm.
FRX 112 What is a lot size?
Mm-hmm.
And then FRX 115 What are pending orders?
Okay.
And FRX 116 Bid versus ask and the spread. And then FRX 117 Margin and leverage. And they're only 5 minutes long. These are not long videos.
Okay.
Ignore that, ignore time zones. And you've got entering a trade on an iPhone, how to do it. FRX 127 tells you how to do it.
Okay.
And then FRX 132, what is a stop loss? Although we've been through that ourselves. Then under series 200,
Mm-hmm.
FRX 204, chart setup, MetaTrader 4.
Okay. Wow, I guess, I just didn't, yeah,
Just
know where
those
to
ones.
click.
I know that sounds like a long list, but honestly, they're 5 minutes
No.
each.
Yeah,
And
no, I
they're
really,
enjoyable. They don't make these things like, oh my God, I've got another hour of it. It's just not, it's not like that.
I like these videos so much better because the last time a daisy sheet, and it was that repetitive, thing in the beginning of each video, and it was, oh,
Oh
it
yeah, I
was, it
remember.
was numbing. It numbed my brain. It
I
was
remember.
crazy.
Yeah.
This is so much better.
Yeah. So that's your little list.
I got it. I got it. I will do that. And I will place trades. And because, I've got a time limit here before the 20th, I've got this week and next week.
Yeah.
The
And
20th is next Friday.
make sure your head's and your heart's in a good place and you think, oh, this is fine. I've got a coffee. I've got half an hour. I'm not going to look at this whole list. I'm just going to go through one. You know what I mean? Don't think, oh, she's just given me this great big list. Oh my God. Don't think, just chunk it up. Do
Yep.
do do one little bit. I always say if you can't do big things, do little things. And anyone who
Yes.
makes any progress, takes any steps, is doing more
Yeah.
than someone that's doing nothing at all and just moaning about their life.
Yeah. Absolutely.
Yeah. So, it's
Sure.
the attitude to it, is important that you associate coming to do a little bit of learning with enjoying it.
Yeah. Yeah. No, absolutely.
Yeah.
Ugh. Okay. Great. Awesome. Thank you. Thank you immensely, Sarah.
You're very
Thank
welcome.
you.
I'm going to stop recording.
Okay.
Pause.